Hi folks, this is Sean Hyman, and today I want to talk to you about how to have greater odds when bottom fishing. Bottom fishing is what most traders try to do, and it's actually a strategy really that should probably be employed, no more than in 10 or 20% of your trades. It really, because why? Because it's a counter trend trade. So you should make most of your trades, at least 8 out of 10 of them, trend trades, because that's where your greatest odds are. But sometimes there can be some great snapbacks that happen in currency pairs, and so we want to talk about a few ways that you can gain an edge in trying to effectively bottom fish. And one of those ways, of course, for those that know Elliot waves, are wave counts. And so there are certain wave counts that are against the trend. Waves 2 and 4 in a trend are against the trend, and then a wave C is the end of a correction against a major trend. So right here you've got A, B, and then C. And so the C area is the area where the downtrend is likely to end somewhere in here and start its eventual ascent upward. So Elliott waves are one of them. Two is chart patterns. Right here you can see a descending triangular formation, which is known in charting as a falling wedge among chartists, or Elliotticians will call it an ending diagonal. There tends to be 5 waves that go back and forth in this, and A, B, C, D, E in it. And so you'd have 1, 2, 3, 4, and then 5 right here. So as this narrows, as this falling wedge narrows so much, as it reaches the bottom edge of the falling wedge, and as it gets into its fifth time of going back and forth, you know that those are all that those give you several edges right then and there that we could be beginning a bottoming phase in this pair, which this pair is Euro Yen. It's on the weekly 10-year chart. So we're talking about a long-term chart here and a long-term view. The third is using the weekly RSI. I love the 6-period RSI, so it's a 6-period RSI on the weekly chart. It's come down, gotten oversold, and is coming back out of that oversold condition. So those are good times to try to do your bottom fishing, because there's a good likelihood that you'll get a bounce over the coming weeks in the short term, and that bounce higher will provide you enough margin of safety to where you can move a stop up, and even if it's not the true bottom and it comes back down and makes a lower low, you had enough slack when it popped up that you could move your stop up and even take partial profits, where if it did recoil back further than you think and it wasn't the true bottom and it stopped you out, it still stopped you out above your break-even point, and it also allowed you to take partial profits on a multi-lot position in the meantime. So those are, it's just one more way to effectively try to bottom fish. So what are the effective ways to bottom fish? Elliott wave patterns, looking for the ends of waves 2, waves 4, and the ends of waves C in particular. And we're seeing one now in Euro Yen. Looking to see a pair bounce off of a barrier in a chart pattern gives an edge. Looking for if it's a pattern like a triangle. Triangles or falling wedges typically have 5 waves back and forth before they have their main breakout. So waiting until you see that the end of what may be that fifth swing back and forth. And then also the RSI, waiting for the weekly RSI to come out of oversold condition. And then the final way is, of course, the way in which you handle the trade. Trying to buy on that bounce up coming out of an oversold condition near the bottom of a chart pattern or support level, and upon the bounce up, when the gain is there, taking some gains off the table and moving a stop greater than break even, because you are trading defensively, assuming that this may or may not emphatically be the bottom. And so if it's not, by the time it comes back and stops out, then you've still made profit on that trade and had a profitable trade while you're attempting to fish for the bottom. If it was the bottom, then you've taken partial profits, move stop up greater than break even, and as it breaks out and heads higher, you can make a ton of money on the latter half of your trade. So these are some effective ways to bottom fish. Again, in context, don't use this as your main strategy. Making a main strategy a counter trend strategy is like always trying to swim upstream. It's just not the best way to go. But when you think markets may be coming to a potential bottom and things may be potentially turning around, it's in that 10 to 20% of your trades where you can employ strategies like this to help you to effectively bottom fish. Thanks so much for watching. Bye bye.